What's up, traders? Welcome to today's Equity Empire Chart Analysis session. When most investors are throwing darts, we're looking for clues in the charts. My name is John McHugh. I'm a former Wall Street analyst, hedge fund manager, and independent trader for the better part of 20 years. Today, we're going to be taking a look at the chart on Coca-Cola Company, symbol KO. And when we look at the chart, we're simply going to be assessing two things. One, what is the direction of the trend? And two, are there clues as to where the big money might be patiently waiting at lower prices to buy or patiently waiting at higher prices to sell? So let's get right into it. First, let's assess the trend. And all we're going to do is going to look for the two most recent highs and two most recent lows and track their direction. And you'll notice is the highs, as they move from left to right, the last two highs have been trending lower, and the two most recent lows, as they move from left to right, have been trending higher. So that is the definition of a sideways trend. And if you simply look back several months, you can just eyeball it and see that we've been chopping sideways. Basically since mid-February, we've been chopping sideways, okay? So definitely a sideways trend. So after we've identified the trend, let's go look and see if we can find support and resistance levels. And there is a support level right here in the 69.10 to 68.58 price range. And there is a resistance level right up here in the 72.03 to 72.77 price point, okay? So with a support level where we bounced off that level a couple times, resistance is where price has had a hard time getting through the 72 price point. We can look to play ping pong here. So you'd be looking to buy at 69.10 to 68.58 and sell at 72 to 72.77. So this is the way you might consider constructing the trade. We'd be looking to place a buy limit order at the top of the support level, 69.10. Protective stop just below the bottom part of that support level range, just below 68.58, and put your price target just in front of that resistance level, 72. And that trade setup right there has a 4.7 to 1 reward to risk ratio. In other words, for every $100 worth of risk you would take in that trade setup, you would have a reward potential of nearly $500. So if your win rate is anywhere near 50% and your average trade setup is close to 5 to 1 reward to risk, that's the formula for building your account over time. Now, anything could happen on any one given trade or every couple, 2 or 3 trades. But you do that over the course of 10, 20, 30 trades, large number of trades. And once again, that's a formula that professionals are looking for to build their accounts over time. So the way, if you were to take this trade setup right here, what you would do is you'd be looking for a quick pullback back to 69.10, bounce off that level, and head higher and go back and retest that first resistance level. So that'd be the ideal trade setup. If you want to get a little more aggressive and just simply, maybe you could have a buy limit order just above current price, or maybe do a market order just at current price and keep the protective stop in the same place. That would have about a 2 to 1 reward to risk ratio. So you would have you had more likelihood of getting filled, but that would dramatically decrease the reward to risk ratio of your trade setup. So let's wrap up today's session, folks. This was a basic one. This is a trade setup in a sideways trend and simply found one support level clearly defined and one resistance level that was clearly defined. And looking to trade, once again, a little bit of ping pong. Buy at the support level and have an exit point price at just in front of the resistance level. So let's wrap it up. Hope you enjoyed the session. I'll be back for more technical analysis all week. In the meantime, wishing you the best of luck in your trading investing, and we'll see you soon.